All right, welcome back to The Explainer. Today we are digging into what is, without a doubt, the most critical part of any financial audit, the reporting process. I mean, think about it. This is where months of painstaking fieldwork and analysis finally get turned into an official record. It's the final act. So let's dive right in.
This quote from the Financial Audit Manual really says it all, doesn't it? The entire reputation of the Auditor General's Department, the DAGP, it doesn't just come down to what auditors find. It all hinges on the quality and the usefulness of that final report. Because for the public, for Parliament, that piece of paper, that is the audit. Everything else is just build up. Okay, so here's our game plan for today. We're going to start with the final reporting gateway. Then we'll get into the nitty-gritty of clearing audit observations. After that, we'll look at something super important, the management representation letter. Then we peek behind the curtain at the auditor's final checklist, see how it all comes together for the annual report, and finally, we'll talk about why this is all the bedrock of public trust. All right, first up, the final reporting gateway. Now, this is way more than just handing over a pile of papers. You should really think of it as a formal, almost ceremonial checkpoint. It's the moment where all that fieldwork, all the evidence, all the analysis gets locked down and prepped for its big public debut. And yeah, it's a super structured process, but for a really good reason. There is absolutely no room for error here. So, once we're through that gateway, we hit our next major milestone, clearing audit observations. And let's be clear, this isn't just auditors walking into a room and reading off a list of findings. No. It's a structured, critical dialogue with the entity's management. And it is absolutely non-negotiable that this happens before a single word of the report sees the light of day. And I mean it, the rules here are ironclad. Every single observation, every conclusion, every recommendation, it all has to be cleared with management first. So why all the fuss? Well, it's a fundamental check for fairness and accuracy, right? It gives management their chance to say, yep, we agree with those facts, or hang on, let us clarify something, or even, actually, we have some new evidence you need to see. It all happens before the ink is dry. And this isn't just one giant chaotic meeting. Oh no, it's a very deliberate step-by-step process that follows the chain of command. Auditors start with the lower-level managers, the folks who are right there in the day-to-day operations. Once they've confirmed the basic facts on the ground, then they move up the ladder to the senior managers. And the most important part? Every single conversation, every response is meticulously documented. We're talking a bulletproof evidence trail here. What's interesting is that the goal here is actually surprisingly collaborative. It's not an ambush, it's not just auditors pointing fingers, it's really about getting on the same page, making sure everyone agrees on the basic facts. Separating those facts from professional opinions, getting rid of any fuzzy, ambiguous language. It's even a chance for the audit team to say, you know what? You've provided some new evidence here, and we're going to modify our findings. It's all about getting it right. Okay, so after all that back and forth, all the discussions are done, now the whole process shifts from spoken words to a formal written commitment. And this comes in the form of something called the Management Representation Letter, or MRL for short. And believe me, in the world of auditing, this is one seriously important document. So what is an MRL? Well, in a nutshell, it's the formal letter where the entity's top brass puts it all down in writing. They're basically saying, yes, we acknowledge these financial statements are our responsibility and we stand by the accuracy of everything we told you during the audit. It is a massive piece of the whole accountability puzzle. And this is no simple I agree checkbox. Oh no, the MRL gets really specific. Management has to confirm a whole host of things. They have to state that they've handed over all the relevant information, that they don't know of any fraud or irregularities, that all the big ticket items, assets, liabilities, you name it, are valid and complete. They even have to confirm that nothing major has happened since the books were closed. It's a really, really thorough declaration. So that begs a pretty important question, right? Who actually signs this thing? Who has the authority to make this kind of sweeping commitment on behalf of an entire organization? When it all comes down to it, whose signature goes on that dotted line? And the answer is, it's not just one person. It's a whole team of senior leaders. The letter usually needs to be signed by the head of the organization, the principal accounting officer, the financial advisor, and the finance and accounts officer. Having all those signatures really drives home a key point. This is a shared responsibility, right from the very top. Okay, so once that MRL is signed, sealed, and delivered, the focus suddenly shifts. The auditors now have to turn the lens back on themselves, because before that final audit opinion can be signed, the audit department has its own set of rigorous internal checks and balances to get through.
And this final internal quality control really revolves around two key documents, the Audit Completion Checklist and the Memorandum Supporting Signature. Now, they might sound kind of similar, but they do totally different jobs. You can think of it like this. The checklist is all about making sure every single procedural box has been ticked. The memorandum, on the other hand, tells the story of the audit.
So, the Audit Completion Checklist. Well, it's pretty much exactly what it sounds like. It's the final review where senior audit managers, the director and director general, formally assure the person signing the final opinion that, yes, every critical step in the process has been completed and completed satisfactorily. It's the final all clear.
The Memorandum Supporting Signature. Now, that's a different beast. It provides the narrative, the color. It's a detailed briefing for the signer that flags any potential issues, maybe some contentious matters that came up, or significant changes in financial policy. Basically, it's all the crucial context that person needs to fully understand what they're about to sign. Now, it's really important to remember that these individual audit reports, they don't just exist in a vacuum. They all feed into one massive, high-stakes public document, the Auditor General's annual report. This is the ultimate public record of their work. And as you can probably guess, the standards for quality here are, well, they're sky high. And there's a very simple reason why the standards are so high. The reputation of the entire department, the whole shebang, really rests on the quality of its reports. It's how they show their work, it's how they prove their value and their professionalism to everyone, the public included. And make no mistake, that annual report is the main event. It's the key document that gets judged by Parliament, by the media, by the public. This is where the reputation of the DAGP is really made or broken. So quality here isn't just about getting the math right. It's about being able to communicate really complex findings in a way that's clear, direct, and actually useful. So what are the hallmarks of a really high-quality annual report? Well, for starters, it's got to be brief, clear, and easy for a non-accountant to read. That means minimal technical jargon. It needs to focus only on the stuff that's truly significant. And maybe most importantly, the conclusions and recommendations have to be genuinely useful. And of course, the golden rule that underpins everything. Every single statement has to be fully supported by reliable, rock-solid evidence. Okay, let's just take a step back for a second and look at the big picture here. We've walked through this whole intricate dance of clearing observations, getting letters signed, and doing internal checklists. So why? What's the real point of all this careful, formal procedure? Well, it all comes down to this. This whole formal process is what ensures that every single audit report is well-written, backed by evidence, and developed with real professional judgment. It's not just about catching mistakes. It's about building something that people can trust, something that builds public accountability and ultimately faith in our institutions. Which leaves us with one last kind of fascinating question to chew on. The manual lays out all these procedures, right? The checklists, the standards, it's all there. But when all of that is done, when the last box is ticked, where does the procedure stop? And where does an auditor's professional judgment, their own personal integrity, truly begin? That's something to think about. Thanks for joining us.